So you might be in a position where you want to buy your first home. So there's maybe a home for you to live in, or you want to buy your first investment property. Now, you want to make sure the foundations are set. And in this video, I'm going to be speaking about some of the key things that you need to make sure that you have right before you even start venturing out and looking. Because these are some of the key things that I see trip up people, and it stops them and stops their progress when it comes to buying their first property. So let's get into it. So the first thing is making sure you can prove your income. So if you're buying a property to live in, then a lender will actually have to see that you earn what you say that you earn, because they're basing their mortgage and their loan on that income. So they'll use some form of multiplier, and this can differ amongst lenders, but they'll use it based on your income. And usually they're going to want to see this income in one of two ways. So if you're under PAYE and you're employed like that, then that's a lot easier. They'll generally ask for the last 3 months of pay slips. They may also ask for your P60 as well. So they've got your payment records and your salary. Now, if you're self-employed, then it's a little bit different. Generally, what they'll ask for is for the last 2 years, and they'll use the last 2 years of your salary, and they'll use that, and then they'll base your lending on what they see for the last 2 salaries. So making sure that you can evidence it very well, your earnings, is going to help you massively when actually looking to get lending for the property you're looking at. Now, if you're looking to buy an investment property, there's less criteria and less requirements when it comes to actually lenders wanting to see your income. Generally, they base the property on the rent that they believe you'll receive, and they'll use something called a stress test, which is the mortgage payments against the rent. And as long as the rent is usually 125%, sometimes 145% of the mortgage, then usually you'll be fine. However, a lot of lenders still require some income. So it could be they have a minimum income of £25,000 for the year. It might be a little bit less. Some have 15. There are some lenders that just require some income, and there are a few lenders that require no income whatsoever. However, if you are a first-time investor, generally it makes it easier if you do have some income, because it will open you up to some lenders. Now, when you do start acquiring properties and then you're looking for lending and you don't have any income, it will be easier because you're already a landlord, and that opens you up to more lenders. Now, the second thing is your credit report. So your credit report is very, very important. So yes, lenders are starting to become a little more relaxed. So if you have like a small CCJ on your account, things like that, then lenders are going to see what they can do to lend to you. Because ultimately lenders, they're in business and they want to lend to individuals like yourself so they can make money from you via the interest. However, they do have a risk profile and a risk appetite. And if your credit report is very bad, there's big CCJs on there, or you've defaulted a lot of payments, then this might not look good. So it's worth checking your credit report, check your credit score, and there's multiple different ways you can do this. You can use Experian, you can use Check My File, which is what I use, and it gives you a nice comprehensive report, which a lot of lenders like to see. So just make sure you've got a good credit score and a good credit report. And if you don't, you can work towards getting a credit score. And there's multiple ways you can do this. So of course, clearing the debts that you have, getting on the voters roll, taking out a credit card and actually paying off in full every single month while you utilize it, things like that. Once you do that, you're going to put yourself in a better position. So make sure you check your credit score and your credit report. And the third thing is evidencing your deposit amount. So when it comes to buying your property, there's going to be a deposit that you're going to be putting towards that property purchase. And you want to make sure that you can evidence it properly. How did you save it? What did you do to acquire that amount? If you're getting a gift deposit from somebody, so a gift deposit, it could be a family member, your dad, your mum, your brother, sister, that are giving you a little bit of money that you can use towards your property purchase. They'll also need to evidence this on some level as well. So making sure that you can evidence the deposit that you're going to be using towards your property purchase is also vital. So again, this is going to differ the percentage amount based on what type of property you're buying. If it's for yourself to live in, this could be 5, 10, 15+%. If you're buying an investment property, there's likely going to be a little bit more, like 25%. But whatever the case may be, you need to evidence how you saved that amount. And if you can do it in a nice, clean way, it makes it easier for you, it makes it easier for your mortgage broker, and it makes it easier for your lender as well. So those are the 3 key things that you want to be thinking about before actually moving forward and buying your first property. Now, if you are in a position where you do want to buy your first property and you're just stuck, or you don't want to make any mistakes that's going to be very, very costly, then feel free to book in a free 30-minute call with me. I'll go through your situation, give you some tips, give you some advice, and then there may be an opportunity for us to work together to get you your first property efficiently and safely as well. So if you enjoyed this video, do give it a like, and if you found value from this video or any other video on this channel, then do subscribe as well. And until next time, happy investing.